Hello there, Maverick traders. This is Rob Reinhold. It is 1 week out until Christmas, so let's jump into it. All right, in the news today, we had some retail sales. We'll talk about that. We'll take a look at the markets, and then I've always got trades for you. Going into a Fed meeting, I'm not going to give you 3 like I usually do. I'm just going to do 2, 1 bull, 1 bear.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Let's take a look at the market news here first. We had really only one report. It was a retail sales report. And that retail sales report came out mixed. The headline number was better than expected. However, the ex-auto number, so they take out automobile sales out of the number, and that's really what people look at for retail sales. It was supposed to come out at plus 0.4. It came out as plus 0.2. Now, if you times that by 12, that's a 2.4% yearly growth. That's still pretty good growth in retail sales, but it's not gangbuster. We were supposed to be at 0.4. That would have been closer to 4% yearly retail sales. So look, it wasn't a bad report. It just wasn't a great report. The markets pulled back just a little bit. And as you can see, the S&P dropped 0.4% along with the NASDAQ. But look at the drop in the Russell. This continues to drop, and the Russell has fallen all the way down to its 50-day moving average. So again, the Russell 2000 is on the verge of going into bearish territory. If we take a look at the internals of the market, the advanced decline line was pretty lousy. For every one stock going up, there was like 3 that were going down. And take a look at the 50 MA, and we've been talking about this. This is a very narrow bullish market. We do not have a lot of stocks above the 50-day moving average, and we really see the big ones, Apple, Microsoft, Nvidia, Tesla, Amazon, they're the ones pushing the markets up. The rest of the market is actually looking pretty sick, as I talked about in the trading room. If we come over here to the S&P chart, today's day was a nothing. It was a nothing. As you can see, we are just up in this high base area. Bottom of this base is right around 60.30. And you can see that today we got down near that point, and we bounced off it. There's 2 times we've bounced off of that point. So today's candle shows me there still is buying out there. It's just not aggressive. And sometimes there's a little bit more sellers and buyers. There's nothing in this chart that's telling me it's imminently going to be a bear market. This chart is actually telling me the market's tired. It's got to take a breather and gain some strength before it breaks out. We come over here to the Qs, and guess what? They're already breaking out. And today's candle, again, was a nothing. It's an inside candle. This kind of candle means really nothing, just like this candle meant nothing back here. I have no idea what's going to happen tomorrow. We do have a Fed meeting, but this is just a bullish market, plain and simple. That being said, if you watched my trading room video over the weekend, I showed you the RSP, I showed you the Russell 2000. I'm not saying this is a great market. What I'm saying is this is a great market for 3 sectors: communication services, consumer, and tech. Everything else is really ugly out there right now, and some stuff is just flat out bearish. So in this kind of market, it's actually a pretty good market for basket trading, because if you're long the strong and short the weak and they keep doing their thing, it's going to be a pretty good return for the month or for the week or whatever it is you're looking for. There's nothing in this heat map that I can really point out. As you can see here, mostly red across the board, but no real violent red anywhere in the sectors. Just a slightly down day. Did anything change on the chart? No, it did not. We are still at a +3. We have a Fed meeting coming up tomorrow. Obviously, that's likely going to push us somewhere in this market. If it pushes to the upside, then it's a breakout of a high base. If we break below this base, now we're just looking at a pullback. And now all of a sudden we're looking at areas like, okay, where's the next area? And then we could look at, places like, okay, 60.15, 60.10, somewhere, again, this whole area down here, 6,000 would be the next support. That would be about 1% down. And then past that, we get down into 59.20. Remember, it can still pull back all the way to the 50-day moving average like it did in November and still be a bullish market. We cannot go to a bearish market outlook until we get that signal. So that means that we simply have to stick with the score. It's a +3 market, but again, it's a very narrow +3 market. I've got 2 trades for you today. One is in the consumer sector and one is in the healthcare sector. Consumer is the strongest sector on the upside and healthcare is the weakest sector on the short side. So that is no surprise that that's where we find our best trades. First up is Visa. So Visa had just a great move here, had an earnings report, jumped up, based, jumped up, and we've really just been in this base. We've been in a base since November. So we're closing in on 2 months of a base, and you can see we poked our head out of the top of that base. Who knows, are we going to get the breakout and run? Are we going to get the breakout and it holds here before it runs? But regardless, this is definitely a bullish outlook here. Visa is very heavily traded, so there's virtually any trade you could put on this. I'm looking at something like a 315, 320. That's going to be a +1 style trade, meaning it's a little bit of delta and a little bit of positive theta. So not super bullish here. If you want to be more bullish, heck, go up to 320, 325. That would be a nice vertical spread that you could put on. Of course, diagonal spreads could work. Again, anything could work here to the bullish side. I'm not looking to be crazy bullish here, but this is a really good looking breakout of a long 2-month high base. And then on the short side, we basically have just the opposite thing. We've got terrible earnings. This is Evolent Health. I've never played it. EVH is the symbol. And you can see it's low based for 2 months after a bad earnings report. And you can see it poked its head down below this one. The big question is, where's it going to go? This one moves quite a bit. As you can see, this is 15 all the way down to 10. And that's a 33% drop on a short side. Could it drop another 33%? Sure, maybe, but I'm not playing that. I'm looking for a 10-11 bear put spread or bear call spread. Either one's going to work. This is going to be about a -2, so this one's going to be a little bit more aggressive on delta. If you don't want to be that aggressive on delta, then you know what? Do an 11-12. Do an 11-12 strike to where it just has to not go up. And you're going to be collecting some premium on that one. Let's talk about tomorrow. I expect there to be a quiet open. A lot of times the morning before the Fed announcement, we get just really low volume, low volatility, and that's probably what we're going to get tomorrow. At 2 p.m. Eastern Time tomorrow, we are going to get the statement. And in that statement, they're going to tell us, do they give us a rate cut? The market is pretty much priced in a 100% chance. So whenever the market's at 100%, it's too risky for the Fed not to do it. It would really be a huge shock to the market. So the Fed is pretty much going to give us that 25 basis point cut. But what they say after is going to be important. Now, with that statement, they will announce future policy. And people are going to be going through that policy. So we will see a move at 2 p.m. Eastern Time. And it's not going to be about the cut at all. It's going to be about what the future holds for rate cuts. I personally think they are going to claw some future rate cuts back. Now, that's not a surprise. The bond market has been moving up in anticipation of that. That's kind of what the market expects at this point, that the Fed is going to go from saying, hey, we're going to cut rates a bunch of times to, hey, we're not going to be as aggressive as we previously stated. I think the market has repriced to where that's okay. However, stocks are priced really, really high at the moment. That is not the kind of statement that the stock market wants. So I'm not saying that we're going to drop tomorrow, but what I'm saying is if they come out and say what I think they're going to say, the market probably cannot go higher on that news alone. There's going to have to be something else that makes it go higher. We do get the press conference at 2:30 p.m. This is where they ask questions. There's also some discovery of new policy in this press conference. Expect there to be at least 1 full hour of high volatility after the Fed meeting statement at 2 p.m. Eastern Time. And then after that, we'll probably have a much better idea of where the market's going to go and react to the Fed statement. We are at a point where we're in a base. So if we have good news and the markets go up on the FOMC statement, I don't see any reason why we don't break out and run to the upside. If the market is disappointed by that and we slip below that low of the high base in the S&P, then I think you got to start looking at a deeper pullback, maybe all the way back to the 50-day moving average. The rest of the market outside of consumer services, consumer, and tech, sorry, communication services, consumer and tech, the rest of the market has already been flashing bearish signs. I think if the Fed disappoints, I think you just finally see those three sectors crack and we'll have a bigger pullback. But if the market likes what the Fed says tomorrow, I don't see any reason why everything doesn't break higher and ultimately go up to new all-time highs. We do have a surprising number of fairly large earnings reports tomorrow after the bell. Micron, Lennar Homes, General Mills, all announced. So if you're in those sectors or at least those industry groups, you definitely want to be taking a look at those earnings. That's the Market Roundup. Goodbye, everyone.